stats. Let's get to Yahoo because the shares are trading down right now. We've got the #1 internet portal reporting fourth quarter earnings after the bell last night, and I see that shares are down about $2.16 at $46.23. Earnings were in line at 11 cents a share. Profits were up 62% on strong advertising revenues. The company was upbeat about the current quarter, saying that revenue would be up almost 80% over last year. Joining us live now from Sunnyvale, California is Susan Decker, Chief Financial Officer of Yahoo. Thanks for being here, Ms. Decker.
Thanks for having me.
Just from looking at your top and bottom line numbers, it is clear that Yahoo is rebounding from the web slump in advertising, but a lot of your strong cash flow performance, I noticed, came from the tremendous growth of paid search. Where did you see the most powerful moves within that space?
We really saw tremendous growth across the board. As you said, it was a terrific quarter. Our top line was up 80%, excluding tax payments, and even more if you include them. Our EBITDA was up 100%. We saw very, very strong growth, particularly in our marketing services business, and it was balanced across all of our traditional branded solutions as well as the paid search offerings.
Yeah, I saw that marketing-related revenue nearly tripled. Fee revenue from premium services also strong, but you have to be feeling Google breathing down your back. They're about to go public. There's a sense investors could very well put a different, perhaps lower value on your paid search business once Google goes public. How do you prepare for that at Yahoo?
You know, what we're really focused on is creating the best products and services for consumers. We've really found that if we keep the consumer at the center of everything we do, ultimately we can create great businesses off that. So part of our objective there is to move to our own algorithmic search in the first quarter. We think that we'll be able to add increasing innovation and opportunities by integrating that with a lot of the content verticals that Yahoo has and offer a great experience for users.
Algorithmic search, what is that?
Algorithmic search is the process of serving results in response to consumer keywords that go in the keyword box.
Exactly what people want, so you don't get a bunch of stuff on the periphery, correct?
Exactly, and the trick there is to both offer a very comprehensive solution, a very relevant solution, a fresh solution with a great user interface, and that's what we're committed to doing.
One thing there's no denying is that you, Terry Semel, and company have done a great job turning free users into paying users, something naysayers said would be nearly impossible. But how do you take it up to the next step, to the next notch?
It's all about providing value to users. So we have a very broad array of products and services, some free, others pay. We actually ended the year at close to 5 million paid relationships, up from 2.2 million a year ago, and put out a forecast that suggests in the around 7.3, 7.4 million at the middle of the range for 04. We feel really great about our ability to achieve that, both because we have just a fantastic and large user base, 263 million users as of the end of this quarter, up 20% or more.
Let me just jump in, because I was looking at a couple of analyst reports, and several of them did mention the debatable issue surrounding the December quarterly results as being that unexpected non-cash stock compensation and higher than expected amortization charges, both resulting from the acquisition of Overture. Can you say anything to quell any concerns about that?
Sure. Yeah, actually, our operating cash flow, including the stock compensation charge, came in at above 150, close to 160 million, which was above the high end of the range that we had provided for analysts. So even including that charge, which was a little bit greater than expected, we exceeded estimates. If you exclude it, we very significantly exceeded estimates. And it was a little larger than expected just because we decided to stick with FIN 28, which causes acceleration of the charge. So the charge in the fourth quarter actually was a lot higher than it would be if you straight-lined it over the life of the options. We moved expenses in from future quarters into the fourth quarter and still exceeded estimates on that basis.
Let's talk guidance for the current quarter. I see you're forecasting revenue of 475 million to 505 million. Is that correct?
That's correct.
Okay, analysts are calling for EPS of 11 cents a share. Some say that you guys continue to give rather conservative estimates here. You know, the whisper number was a lot higher than estimates this time around. How do you convince investors that they need to hold on to the stock rather than succumb to market noise like they are doing today and selling the stock?
We try to stay out of that debate of market noise and really focus on the things that we can control. The guidance we put out, we think, is really responsible guidance. We just came off a fantastic year, you know, in the advertising business, more than 40% organically without acquisitions and close to 50% in our fourth quarter. So on a year like that, to be projecting 25, 30% growth in the ad business and overall growth, we think is a very, very strong growth rate. more than most people are forecasting for the industry, and we think it's prudent to plan expenses on that kind of growth rate as opposed to assume it's going to be just as rapid on a big base this year. But
it's funny how they want you to be swashbuckling and dramatic, yet then they get angry when it comes in lower than expected. So we understand. All right, thank you very much, Ms. Decker.
Thank you for having me.
Susan Decker is Chief Financial Officer at Yahoo, live from Sunnyvale, California.